welcome back to Rethink's mini webcast series on UAE corporate tax. Well, it's the beginning of September and the hot summer is almost over. The schools are back and soon we'll be able to bask in some glorious UAE weather once again. So now is the ideal time to take stock of where you are in your corporate tax journey and ensure you're familiar with what you need to do in the weeks and months ahead. It's been a little while since you last heard from us in this series. We've been busy carrying out assignments on behalf of clients, much of which, of course, has been related to corporate tax, CT. Indeed, that's exactly what Kirti, our tax director, who regular viewers will know normally joins me, is doing today. So it's just me with a rapid-fire run-through of what you should have done by now, what you should be doing right now, and what you still have to do as far as CT is concerned. So let's get straight into it. A quick reminder, practically all UAE structures, mainland and free zone companies, foundations, freelance licensees, partnerships, etc., fall into the CT net, meaning they must register for CT and file an annual CT return with the FTA. When you must register for corporate tax depends on the date of your commercial license. Failure to register on time results in a 10,000 dirhams fine. The QR code on the screen will take you to further information on when you should register, and we can, of course, assist if you wish. CT lifts the bar in terms of standards of accounting required by your business. Your accounting systems need to be capable of producing financial information in the required detail of the corporate tax return, the CTR, a degree of sophistication hitherto not required by the authorities. Whilst businesses with less than 3 million dirhams of sales can keep books on a cash-in, cash-out basis, businesses with sales greater than 3 million dirhams must follow International Financial Reporting Standards, IFRS. The FTA, of course, may ask to inspect your books of account at any time. For more details on these practical accounting aspects, the QR code on your screen takes you to episode 9 of this series. Rethink's finance and accounting team would be pleased to assist you with your accounting needs. Some free zone entities are eligible for corporate tax-free status. Applicability depends on several factors, whether the income of the company falls under the definition of one or more of the qualifying activities defined in the law, and whether the threshold for having non-qualifying income has been exceeded. Having accounts audited annually, demonstrating that you have adequate economic substance within a free zone, adhering to transfer pricing regulations, and of course, adhering to the free zone's own regulations. Companies qualifying for the tax-free regime are known as qualifying free zone persons, QFZPs. If a company meets all the requirements of a QFZP, no corporate tax will apply to the profits. But if in any future financial year the requirements are not met, the QZFP status will be lost for that year and the following 4 years. It's therefore vital that close attention is paid to meeting all the QFZP requirements at all times. More details on this in episode 8 of this series. The QR code for this is on your screen. By federal law, practically all UAE structures should have their accounts audited. Until now, this has not really been enforced by the authorities. But given that a company's financial statements will be the basis on which they pay corporate tax, it's anticipated that the FTA will more strictly enforce this. In addition, the CT legislation specifically mentions that free zone companies wishing to avail of the corporate tax-free status and companies with sales greater than 50 million dirhams must have their accounts audited annually. The QR code on the screen takes you to more detail on audit requirements in the UAE. And we can, of course, assist with all your audit needs. You are required to file an annual corporate tax return, abbreviated to CTR, 9 months after the end of your financial year, which is, of course, also your tax period. So for businesses with financial year ending 31st December 2024, the CTR must be filed by the 30th September 2025. Penalties will apply for late filing. The CTR template has not been officially released by the FTA, but much information about it is available, and it's clear that the process is quite complex, even for businesses who will not pay any corporate tax, as they have sales of no more than 3 million dirhams and are therefore eligible for small business relief. Issues such as real estate, intellectual property, free zone relief, transfer pricing of transactions with related parties and connected persons, holding shares, etc., increases this complexity. Notwithstanding the CTR deadline being 9 months after your year end, it makes sense to prepare your CTR at the same time as you finalize your accounts, mapping your own account categories with the categories required by the CTR template so that the CTR is produced automatically to the maximum extent possible. Submission and payment of tax can take place on or before the deadline. We're there to assist you to navigate the process. So in summary, you should now either be registered for CT or know your deadline. Your accounting system should be capable of producing your financial statements to the required standard and with the level of detail necessary to prepare your corporate tax return. You should understand your audit requirements, and if you're incorporated in a free zone, you should have assessed your eligibility for corporate tax-free status and be planning accordingly. Well, there you have it. In short, the introduction of CT means that what was previously considered best practice in accounting, administration, and auditing has become mere compliance. We'll be back soon with more insights on CT, but in the meantime, I wish you a great rest of the day. Thanks for watching and goodbye.